Yes. What's going on, man? Always remember, whatever you think about comes about. Whatever you focus on grows. It's a universal law. It's what grows. Fractals, never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. This is the chart of Pfizer. That doesn't really matter. That's not what we're concerned with. Let me take this down here. So, where's this? If you look, so today, tip ranks. I'm going to show you something you might go through with the money phone. Let's say you have money you want to put to work and you're looking. Now, if you're smart, you're always looking. Okay, you're always looking. And the way I like to play every game is I want money in play all the time, irregardless of market conditions, irregardless of what may happen in the future. I mean, what will, you know. And if things go bad, well, I'm going to try to do the best I can. And if things go good, I'm going to try to do the best I can. Like, I have every intention of doing the best I can either direction, okay? And if we were to look at this chart, you'd say, wow, I mean, this thing's run, right? And some people may look at this and go, well, that sucks. It was way up here, and then now it's here. And it's like, yeah. You could have said that over here, though, too. You could have said this sucks because now it's down here. And that's one way to see it. Now, what I see is just the natural flow of prices. Chaos turned into order. It just flows. Fractals, never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. That the price of something swings. It moves. And it goes from a state of undervalued to a state of overvalued because it's not a perfect mechanism. It's made up of millions of people get together to decide on every given day what the price of this thing right here will be. That's called stock market. And there's thousands of these assets that trade every day in the open stock market, man. And these assets every day get repriced. Now, some of the people repricing them are complete morons. They actually have input. They could have no clue what they're doing. No idea. And they get a vote. And so do really smart people. They meet every day. Used to be by a wall. And they do it in person. Now they do it. They don't even see each other. And they're all over the world. I could send money to someone in Ukraine through Bitcoin. By the way, if you don't know how to do that, you should be embarrassed. You're an adult in the modern world. You should know how to send money to someone in the Ukraine if you wanted to. Or Sub-Saharan Africa. You know how to do that? You should know how to do that. It's not that complicated. It's one of those things we should know. We're going to turn off commenting. So this is the chart of Pfizer, and this is super important for you to understand. A couple ways you can play this. You can play this both ways at different times or at the same time. Let's say, let me show you something here. I'm going to show you, let's bring this up. Is Pfizer in my... No, it is not. This right here is a portfolio of stocks, right? This is under my risk. E-Trade has a thing. You can click and it'll take a risk assessment of your portfolio. Mine runs hot, okay? Means they're saying it's a little on the risky side. What they mean by risk is that the price goes up and down. And if the price doesn't go down that much, they say, well, that's not that risky. Well, guess what? If it doesn't go down much, it's kind of hard to buy it cheaper. Just saying. So they call that, you ever hear terms alpha and beta? Well, a stock can have a beta, and that means its correlation to the S&P 500. A stock like Verizon, per se, may move half the distance. So if the stock market's up 2% that day, Verizon will be up 1%. They'd say it has a beta of 0.5. If it has a 1, it means it runs basically in lockstep with the stock market. So if you want to make stock market-like gains, you buy stocks that move like the stock market. That's called fucking index fund, right? That's what they do. You can do that. You can own stocks. So this right here, they say runs a little hot, and it does. And then you got what? Southern, Pepsi, Chevron, McDonald's, MO, Verizon, HBI, New E, VTR. These are in order. And if you look over here, see what it says? This is what percentage it is of my portfolio. Now, what do we got? From 7% down to 3%. Now, think about that. That's my risk in each one of these. Now, there's about $30,000, almost 40 in BX. What percent does it show? Now, that's of these accounts here, 7.3. So we can only do it of this account right here. 6%. What's 6%? Southern Electric, a utility company. Not that aggressive, right? Pepsi, you go on and on. What are you seeing? A distribution of money, right? Now, the ones that I've owned the longest tend to be the largest. Why? Well, as I stay with the money flow moving forward, what others may perceive as bad after big sell-offs, I would say are the spots that you would be aggressive. Now, we can only have this if it comes down. So in other words, we need the down in order to make the money on the up. And so if we see this and we back up from the cycle, there's a phrase in Bitcoin, when in doubt, back out. Meaning you got to keep your eye on what? The big picture. It's one of the 10 pillars of success. See the big picture. The big picture has nothing to do with this week. Oh, but it was terrible this week. And sometimes life is terrible this week. Sometimes families have problems. Sometimes sales go down. Sometimes you have issues. Shit doesn't work. Things break. Yeah, no shit. That's why you have good, without that, there isn't going to be any good times. Right? The good times are the opposite of that, right? It's hard to have them if you don't have bad ones. You have nothing to compare it to. But inside of us, we seek some sort of symbiotic balance of just always just enough good to make me happy. Just don't make my life hard. Don't press on me too much. I'm not greedy. I don't want to let you ever hear people say that? I'm not greedy. I don't want to get rich, Gerald. I just want more. I just want to be able to take care of my family. Why? I get that email a lot. It's just as easy to say I want to be rich. Why do people apologize for that? Even if you're not going to get it, what does it hurt to say it? Like sometimes just saying it makes people uncomfortable. You got to ask yourself, why would that be? Why would you be uncomfortable with that? That's a psychological thing. I'm not trying to get rich. People say that to me all the time. I'm just trying to get, I'm like, why did you say that? Why don't you try? It's just as easy. I mean, you're probably not going to get it. But you'll probably get more than if you go, well, I just want to get right here. If I just get this little bit right here, then I'll be happy. No. No. So that's not the approach that you're going to come to these with, man. And that if you come to the stock market with your intelligent brain and your ability to consistently apply yourself and to continue to learn and study and not make stupid mistakes, okay? And you have to hone in on something, and you have to stay with it for a minute. And guess what? Through a minute means through ups, downs, cycles, to understand if what you're doing even works. You can't tell in a couple months, couple weeks, probably not even a couple years. I'm hard to doubt you're going to come in here and do it right all the time. Highly doubt that. One of the basic tenets of the money flow is when price is on this side of the green line, it's in an uptrend. Uptrend, okay? Super important. It's one of the core principles. Now, what we might do could be different. Now, let's put a circle everywhere that happens on this chart. And then I'm going to show you some emails I got from Tip Ranks with some hot tips, takes of 3 stocks that you might consider adding to your portfolio. Let's see. How did they word it? 3 top healthcare stocks to make your portfolio smarter. He implies that if you put these 3 stocks into your portfolio, you'll be smarter. And we're going to look and see, is that true? So here and here. During this time, price was on that side of the green line, right? Right. So we have a basic belief that anything above the 20-day moving average, which is represented by this green line, which is the average of 20 consecutive days, simply divided by 20. So you take the price of yesterday, it was 17.32. Next day, 17.328. Next day, 18.01. Next day, 17.62. And it goes back and forth and back and forth. And we watch, and every day we try to summarize some massive importance to today's move. Did you see today? It's like, yeah. It really don't mean much, whether up or down. Look at this big day. That big day went up. Woo! Look. Starting to price Lambos. Look at that day. And then next day, boom, boom, right back. Now they're like, oh, sad. Going into the weekend, sad. What do you think happened to the rally, Gerald? Like, this is the stuff that goes through people's heads, man. It was rally on here, right? And then going into the weekend, what? Oh, they're remembering all this down move. Months of going down. We finally start to go up, and then look. You see how if you start applying a lot of emotion and thought and, reading a lot into day to day, you'll fuck yourself up. It means nothing. It's when it's more than 20. Then that day 20 days ago means something. Meaning 20 days from today, we'll see if this day means anything. Because here you had a day where price rocketed up, shot up 3, 4, 5%. Woohoo! Next day down, all the way back to basically where it started. What the fuck did that day mean? It felt good that day, rocketing up, right? And we're all happy, excited. Woo! 2 days later, back to where we were. Did that day 2 days ago mean anything or not? No. And guess what today means? Nothing. In any given day from here forth for the rest of your life in the stock market, none of those days mean shit. In and of themselves. What are you saying, Joe? It takes groups of days. You can't form a bottom without 4 days. Now, people will read into one day as if they're Nostradamus. And then when they get it right, go, told you. Really? Really? Did you? You're a genius. See, the money flow expresses that nobody knows where the market's going. Nobody. If you knew it all, you'd have no money problems ever. You just print money. You just pull it out here. Blah, blah, blah. That's why when you read some people's stuff and you see them, I see them on you, I'm like, Jesus, dude. How can anybody believe this idiot? It's not possible. If you were that right, that consistent, why would you even be talking to me? You'd be a fucking billionaire somewhere. You'd be an oligarch. Right? Gotta be on a yacht, not pitching you something. So in other words, nobody knows price. Nobody knows where it's going. I don't make any idea that I know. Here's what I do know, though. Here's what I do know, and I should have brought this thing, that over time, assets go higher. Let me see if I can find this thing I posted in our Discord group. Okay, check this out. The 15 worst places to buy a home in the U.S. if you want it to increase in value. These are the places you do not want to own at all. They're horrible. If you go look, let's see. God darn it. Look at this. Flint, Michigan. There's no water. It's only gone up 83%. Monroe, Michigan. Look at Michigan. A lot of Michigan in there. Shit, that's where 8 Mile's at. Right? Look at Michigan. Representing 1, 2, 3, 4, 5, 6. Hell yeah. You live in Michigan? Good. Like, that's where you want to live, right? The worst economic place you can pop. I got kids that live in Michigan that'll call me about real estate. And I'm like, why don't you move? I don't know, man. You mean leave this paradise? Leave the place where on planet Earth it doesn't want to go up. Why would I do that, Gerald? There's people that'll struggle with that. They'll just sit there hoping things get better. Right? This is an obvious alarm signal. Alarm, alert, right? You have to leave, move. That's what that means. People fight it, though. It's easier to just sit in your own filth, right? It's easier, man. Why risk moving when you can live in this shitty place? Stocks are similar. But notice these have all gone up. They didn't go up by much, but they went up. One of the basic tenets of the money flow is that valuable assets, real assets. Now, if you're buying the further you get out in the speculative, they're going to say you're risky. You're past the S&P 500. See, the benchmark is beta 1, meaning it runs basically and flows in line with the S&P 500, man. Let's see. This is my dividend portfolio. I get a risk rate of 119. 119 just crept over. I'm aggressive. It's aggressive. The dividend portfolio, the buy and hold, to these guys is aggressive. You know what they mean by that, right? You know what this means? That when the market goes up, they go up more. And when it goes down, they go down more. So the way I see that is that's a good thing, right? Like, so if we're watching this and it goes from, let's clean it. And it goes from here to here. Now, about up in here, if I bought some here, don't I like that better than if it only went to here and then to there? In other words, if I could have quality stocks that pay dividends, that are blue chip, that are, they're big multi-billion-dollar corporations. This is not Shiba here, okay? This is not a speculative, battery stock. This is Pfizer. They've been around for a minute. They helped your dad out with sex. This is the company. They've been around for a minute. This is not a secret, right? Matter of fact, it's so around, we can come over here, we can type Pfizer in, and they say it's worth $61. Oh, wow. Upside of possible 18% to get to true value. So as I watch this, guess what? That was true over here, okay? Guess what? That was still true here. Now, I want you to see something. How many days is it from here to here? Well, October 15th. Now we're in November. November 15th. That's 1 month. 1 month. 1 month. And out of this 1 month, watch this. This is crazy. These days are up. They barely moved. up, barely moved. There's 5 days. 5 days. That's one entire trading week right here where it didn't even move. Right? Didn't move. It's the same fucking price. For a week. It opened up here, came down here, then it opened here, came here, then opened here, came here, opened here, came here, opened here, came here. 1 week. But we'll read into it. We'll make it bigger than it is. We start fantasizing. We start thinking, oh my God, either up or down. And yet 1 day means nothing. Nothing. It's the accumulation of days. The money flow is fractal. 1 day, add 4 more, you got 5. 5 days makes a what? A week. How many weeks in a month? 4. 4 weeks in a month. How many days in a month? 30. How many trading days? 20. So when price is above this green line, it means price today, the price today, is higher than the average price of the last 20 days, each day of which meant nothing. But as we accumulate them, in the smallest element that it means anything is 4. Why? 4 starts to build a level or a zone of either accumulation or distribution, which is the pattern that you see. Hold on. When you look at the money flow. And yet Monday, it'll open and people will have some emotional assessment to whether it being green or red. If it's green, you're like, oh man, that's good, man. And if it's red, you're like, oh Jesus, more of this shit. And yet that day means nothing. Because tomorrow it could do the exact fucking opposite. And then you're like, oh my God, this shit. Oh man, this is awesome. And you do that 20 times just to get to 1 point in the strategy that it even matters. Guy says, I'm too busy, Gerald. Too busy. It takes like 10 fucking minutes. What are you talking about? What are you busy doing? I get them all the time. A lot going on at work. Really? A lot? So much you can't look and see a stage 1 on Pfizer? Nope, that 10 fucking seconds is not allotted. It'd be impossible. You say, yeah, but I can't research it. What are you researching? You're just going to own it. You own it. And then don't sell it. Pretty simple. How much time does it take to own something and not sell it? 0. So now we're at 0 time. Right? So if I own Pfizer right now, what is it doing? It's going down. How much? That's below the 20. What does that take? Looks like it's going into a downturn, right? Do I buy here? No. So how much time does that take? None. Next chart. Right? I'm not buying any. It's going down, man. Now, if you say, well, I'm swing trading. All right, well, you probably should be downsizing it. Looks like a stage 3. Doesn't it? Price just went below the 20-day moving average. You execute. Start to sell. You have to downsize it. If you're swing trading it, what are you going to do? Hold it into a fucking sell-off? That's not swing trading. That's position trading. Now, I will. But I'm trying to get a lot of shares to sell it later for a shit ton of money. That's different, right? So as I look at this, now, I know, here's what the guy says, opportunity cost, you could get out, and then you could re-enter the position. All right, you do that. Try to do that for the exact same fucking stocks, never messing it up, always on time. You won't, never is. You'll get lured. You'll drop Pfizer because this other stock came open, and then you don't stay with Pfizer. Pfizer moves around, you're not in it. And then you watch Netflix go from $30 to $500 right in front of you. But you're not in it because you're moving here and there and there and there and there and there and stressing. Oh, today's important. No, it's not. Yesterday it was. Today's not good. And you add all this importance to every single day that means nothing. Now, if you're going to shorten that window, that's how you would do it, right? You buy on the breakout, take your money off as soon as stage 3 forms, and get the fuck out when it starts to go down. That's trading. That's executing the trade, right? Mind, method, money. Mind. Do I have the mindset to enter, take down, get off? Right? That's trading. The moment you say, well, I'll see if it comes back tomorrow, you're no longer trading. Now you're riding the wave. That's a different game. And if you're going to do that, then you handle that and it goes down. And then what? You should be looking to add on lower. That's the only way that fucking game works. Or you're patient and just wait for a long period of time. Right? But the idea being, if it gives you an opportunity to lower your price point, not averaging down. It's not averaging down. You're adding on stage 1s through the velocity of price movement. Stage 1, stage 2, stage 3, stage 4 goes down stage 1. And it's going to keep doing that from here on out, whether you like it or not. You will always have sell-offs and wars and fucking famines and depressions and inverted yield curves. I've been hearing that shit my entire adult life. This always predicts a recession. Now that's what you're going to hear over and fucking over on YouTube by influencers. The yield curve inverted, Gerald. And a lot of people with no money try to make it sound like it's a big fucking deal. We have no money. Really, Johnny? Do you think you should protect your 80,000? You're going to sidestep it and then re-enter because you have a lot of experience doing that, right? People do this, man. They'll take that information and make life-changing decisions. I have a friend 5 years ago sold all his real estate. It was at a top. He was going to take all that profit and double up his portfolio. He's one of the smartest guys I know. You know what he always tells me the dumbest thing he ever did was? Yeah, sold all his real estate like 100% ago. Because it was the top. Because the yield curve was going to invert. Now he fucking kicks himself in the ass every day. And I said, instead of doing that, bro, you should have held those valuable assets. Should have took the money you were making and you should have added when things were perfectly, looked like they were at the bottom. And then if the bottom didn't happen and it kept going up, good. If it comes down and sets up, good. We have a plan. And we just go forward with optimism and opportunity. That's it, man. That's how you survive. That's how you win. You're an optimist. You anticipate that valuable things will rationally and logically at some point be valuable again. Gold will go up and gold will go down. Oil will go up and oil will go down. Bitcoin will go up and Bitcoin will go down. Since I've been in Bitcoin, this is now my third or fourth time to buy it at 50% off. Since I've been running the Money Flow gang, we've had 3 chances to buy Bitcoin at a 50% discount. I'd be willing to know how many people actually did. I bet it's few to fucking very slim. Why? Because people make a big deal out of each day and don't see the big picture that you need these price moves. You need the sideways. If Bitcoin's going to make us rich, we need it to come down and then run up and then come down and then run up and then come down. And it's not, you could trade it. You could, but you better be willing to re-enter very quickly. Because see, what my rich friend was trying to do was be quasi-trader investor. Can't be a trader and an investor. You're either fucking trading or you're investing. Now, you can take the skill set from trading, which is what I did in position trades in my buy and hold, is as I learned to trade and learn, this is a swing trade. You enter on the 1, you place a stop right here. Not complicated. You should never need to have this ever explained to you again. Once you understand market structure, you see that the market builds structure, stage 1s, right? And as we go through building this out, there's our pivot points. Once you know how to do this, you can just do it all the time. You just do it on your chart, right? And so if I'm entering on a stage 1 there, up in here, where's my stop loss, right? Right over in here, right around in there. Why? That's the current, remember if you follow me, I got in an argument with that other guru. And he's like, well, we don't know if the bottom's in. Bullshit. I know the bottom's in. It's right there. That's the bottom. And he goes, well, there could be another one. No shit. There could always be another bottom and another top. Duh. That's called highs and lows. That's called pivot points. That's called market structure. But sitting around thinking, well, it might go up, might go down, that doesn't do anything. It goes up and it goes down. And you draw it out and you go, okay, we're in stage 1 here. All right, now, oh, that definitely is a 3. You don't need to be told that's a 3. It's right out. I mean, right there, dude. It ran up, it topped out, it rolled over, and now it's below the 20. So if you're swing trading, you execute on the trade, man. Where's the chart? Right there. You're in, boom, boom, boom. What did it do? Almost hit 70, didn't quite do it. But what did it do? Hit previous high. So as a swing trade, you take the trade down. You're successful. That is the point. If you're swing trading the money flow, you're swing trading this pattern. You're entering, adding on a breakout, and then letting it run. And then you honor it. When you hit a 70 RSI or hit a previous high, you start downsizing the trade because statistically it's going to turn around. Do we know for certain? No. And so we trade inside of a world of uncertainty with certain rules. I establish, boom, boom, this is what I do. This is what I do. And if you do that and you execute on that repetitiously, right? But here's what you got to handle. When you enter, and this is what you got to work out. You say, well, I don't like getting stopped out. Then don't play this game. It's fractal. You get to decide the time frame. So rather than beat yourself up, don't play that game. Right? I don't play that game that much. Some things I do. Because I like trading a little bit. I also like gambling. I like playing blackjack. I like some options here and there. Right? But I'm not fucking delusional about it, where my money and where my wealth's going to come from. And if I can pull off a great trade and make some money, great. But I can get rich every day. Every day I should be trying to get rich, and I can pull off some of these trades, some of these flips. Meaning because I buy properties, and I'm always looking for 2-1s, 2-1s, 2-1s. If I come across a 3-2 that could be flipped, yeah, I'll do that. If I come across what is an easy setup as a swing trade because I follow Pfizer every day. I know, it's too busy. You're busy at work. I get that one. I was so busy. Really? It's busy at fucking Trump's house too. He invests. Oh, and does books, TV shows. Fuck out of here. It's busy. I get that a lot, man. Busy. Hold on. Nobody's too busy to trade. Nobody's too busy. You're just trading wrong. You got to change the way you're trading. Trading's not in and out, man. Trading's not based on your fucking research. Could be, but you can trade around this. So if this was your buy and hold, let's see, where's Pfizer in this list? That's the top 10. So Pfizer makes up 3.4% of my portfolio. Walmart, Welltower, MFA, Starbucks, ARC, GBTC, Kraft, Gilead, First Energy. So these start coming down, right? The sizes start coming down. Why? Because these are newer positions. The other ones are olders. Amgen, Intel, IP. And as we go down, they get smaller and smaller and smaller, 1.5%. So if that stock goes to 0, do I lose any sleep? No. Will my life be changed? No. Right? So I have a core that's heavily weighted. 5, 6, 7, 8, 9%. Why? Probably because they pay bigger dividends. But these I'm building, these are newer, right? If you go all the way to, what's the last thing I added here? Let's see. Hasbro. Remember I've been adding to this these last few weeks? It's not even 1%. So what am I trying to do? Over time, as this stock, when it goes undervalued, what am I looking to do? Add. Why? Because it's undervalued. And I want to take gains from overvalued shit and put it into things that are undervalued. By doing that, I can increase the whole portfolio yield, right? But as I do this day after day and I'm watching these 40 stocks, you don't think there's swing trades that set up? Oh, wait, look, Exxon's breaking out. That takes 5 seconds. 5 seconds to analyze the chart. You already own it. Come over here to your trading account, click buy. But I'm so busy. I know, people are busy. I get it. So busy at work. You work so goddamn much you can't get rich. I get it. I get it. You're too busy working to get rich. I understand. Makes total sense to me. Just work your ass off every day to make somebody else rich. That's a good idea. You can just kill yourself at some corporation. Just make them richer and richer. I can't focus on my investing for myself right now, Gerald, because I need to work for this corporation. No, bro. The reason you work for the fucking corporation is to get money so that you can invest it to protect your family. Because they will let you go like that. They don't give a fuck. They're not going to keep you because, oh, well, it'd be unfortunate if we let him go. People tell me this all the time. I got a buddy, he's 53 years old with me. He's been too busy the whole 30 years. Then I bought house after house after house after house, dividend stock after dividend stock, buying stage ones, focusing on the market. Oh, and by the way, I was busy too. Had kids, worked 2 jobs. That's why I worked 8 days a week, because I couldn't do all I'm trying to do in a 5-day period. You can't. And so I began to adjust how I do stocks. Why? Because I can't day trade because I'm working. Right? Or I have kids. I have other obligations. So when I come to the money flow, I say, does the money flow have a way to help me get rich and accumulate shares in amazing companies that'll pay me over time? And if I stick with it, I'll grow richer and richer and richer. And they say, yeah, maybe I should carve out some time for that, since that would be really important to my kids going to college or medical, like having money. That would be super important. Not just making it, not just work for work's sake, but to keep it, man. This is about keeping your money. When you buy stocks and these assets, that's the opposite of getting rid of your money. It's building your money, building your wealth, and it begins to grow on itself over time. So whenever I meet someone, we don't have time. What are you talking about? Are you out of your mind? There's people do it, man. People go through their whole life putting almost no importance whatsoever on this. That literally every fucking thing else in their life is more important than any of this. I get an email, literally everything in their life is more important. That's people who don't invest. Literally everything in their life is more important than their own wealth, future, and family's financial security. This is Pfizer. If we were to back this chart up, and they pay a nice dividend, right? Let's go to a weekly. Look at the bot, and let's just do this as just lazy analysis. Bottom, right? Bottom. I know. Bottom. Man, if you could figure out those, what if you just bought all of them? You say you can't do that, John. I go, I know, but it's like 3 years, man. So you could buy like 2. And you go, how do you know you can do it? Because you can buy shoes. You can buy this, okay? You buy some, right? And the other guy doesn't. It was 3 months later, you buy some. You think you can come up with some money in 3 months? Of course you can, right? So as I say it like that, you can see how ridiculous that is, right? And then what? Maybe some more, a couple months. And this has been over years, right? Oh, and this whole time, they're throwing you dividends, right? All kinds of bad news and shit on TV, right? Now what? It ran up, and then what? Pulled back. And then it ran up, and what? Pulled back. You notice the pattern? Runs up, pulls back, runs up, pulls back. Now we could switch this out. That's Pfizer. What if it was Bitcoin? What if it was Bitcoin? This is on a daily, right? Let's don't put it on it. Ooh, we're up today, $500 a coin. That was the other thing I got in that fight with it. Or not fight, it just pissed me off. People can't afford Bitcoin. What do you buy Satoshis, dummy. You don't buy a whole Bitcoin. Like anybody, I mean, come on. It's too expensive. What are you talking about, too expensive? Poor people shouldn't buy expensive things, Gerald. Really? Why do you think it's expensive? Because it's the number one asset. So because people are poor or don't have much money, they shouldn't buy the number one asset? The one the banks are buying? The one that can be used as collateral? The top one? They shouldn't buy that one, huh? Fuck out of here. So I don't believe that, man. I think you should buy quality. Like, why would you not? It doesn't make any sense to me. Now, I'm not against the other ones, but that's like saying you shouldn't buy Google. Really? When that you could have given that advice the last 10 years. Don't buy Google. It's expensive. Really? Was it expensive at $8,000? Was it expensive at $12,000? What about $24,000? Don't buy Bitcoin. It's $24,000. What about when it got to $68,000 or $66,000? Was it expensive then? The problem when you apply this logic and act as if you've lived more than fucking 7 years. I don't know if you know this. The stock market was here before you. So you may bring your little bit of limited information to the game and think you're smart and read some negative shit and then extrapolate from that and then say, oh, it's fucking over from here. Dude, generation after generation does this same thing. And yet prices go higher, dividend profits increase, and from time to time they go down. And when they go down, we can take advantage of that. We need the volatility, up and down, right? We need it to go up so we can sell it for traders or take profits when we're investors. But as an investor, right now I'm trying to buy a beach condo in Florida and they won't stop going up. They won't stop. I bought mine 6 months ago. It's $57,000 more now. What the fuck? I don't like it. But when we get into stocks, that's all they want. Why? Because they don't have any real money in it, man. Most people are not real investors. You've owned a stock a year or two. I mean, you can call yourself one, but that's yet to be seen. You've owned stocks 2 or 3 years. All right, maybe. You could still get blown out. I don't know you're going to hang in there. I don't know you have the courage and the discipline and the consistency to apply. Shit, your mom may ask for money and you blow out. Oh, I got to sell my stocks, Gerald. Busy at work. Can't really focus on it. It don't take much to blow out most men. Just adds a little bit to their schedule. Wife says, oh, you can't do that anymore. Okay. That's it. That's it. Not a battle. Not putting their lot. Nothing like that. Just don't. Okay. And they give it up. That's it, man. That's all it takes to wipe out most people. Someone around them going, no. They cave. Right? Or their friend, hey, let's go over here. Right? Let's buy this. So look at this. So what is that? 3 components to trading and investing. Mind. Shit I was just talking about there is mindset. There is nobody in my life who come to me. There is nothing. I would rearrange fucking everything. Investing comes first for me. Then how do I make money? Right? Third, all right, how does my family function around how I make money and where I invest? I rearrange it. And I did that about 15 years ago. I just rearranged it. Right? First bills I pay are everything to do with my properties. Investments first. And then what's left, I got to live on. I start going down the list. I do it in reverse. And I started doing that. And that's when I realized I don't have enough money. So I had to work more. Because I can't live in reverse if I don't have money. Because when it gets time to pay bills, it's not there. So I got to go do things. And I began to reverse it. So a lot of people, they're never going to be great at the stock market because there's still things that could keep you from getting in the stock market. I got to work more. All right. Quit. Okay? If that's what it was, I mean, you decide, right? So people decide what's going to take them out. And then some people, nothing takes them out. And time goes on and their 200 becomes 400, 600, 900, and then they got lucky. And that's how that happens, man. So I would, maybe today write on paper what'll take you out. If someone said this, if this happens, if this, I'm out. I'm out. If they increase your hours at work, you're out. Your wife says you're spending too much, you're out. Your husband, I'm out. What is it? See, once there is nothing, like you've thought it through, there is nothing. Now you can start to get good at it. Until you have that epiphany moment, we're still questioning whether you're going to be around or not. Meaning, yeah, most people I meet and talk to, and they talk to me about stocks or advice, I highly doubt you're even going to be here in 3 years, so I'm kind of not even fucking listening. The advice that I get from people about property who don't own property, it's like, right through my brain. Not listening to you. You don't own shit. Right? So till a person owns it, anybody can have book knowledge and read things. It's different to execute on it day after day. It's hard, dude. So as you go through there, so here's an email that I just got. 3 top healthcare stocks to make your portfolio smarter. Finding strong performing stocks has always been a challenge, not least with the recent market volatility causing near daily price swings in action. Daily doesn't mean jack, okay? Up, down, who cares? The healthcare sector has had some stocks which traditionally have brought more stable returns over the long run. 3 of which we have picked out using our smart portfolio tool. Take a look at what options could shield investors from market turmoil. Then they slip in an ad. That's an ad right there, okay? So if we go look, here we go. Let's look. Stock number 1, ABBV. All right, let's pull that up. ABBV. All right. We think after this historic run of about 250%, you should back up the truck now. Look at this stock. I'm in this stock. We've traded in and out of this one a lot. This is one I brought to everyone's attention a while back. Back in the $80, $90 range. Now, if you look over here, that stock fell from $120 to, it was like right at 90 or 100. Remember? If we back it up, look over here. Where's it at? Oh. It fell from $90 down to like 40 something. 50% fall. Up here, big nice fall, right? Big nice fall. If we just take the RSI indicator and everywhere it's red or green on the top here, just circle it in, okay? Now, and if we go look over here, we'll see that's where it tends to top out. Not every time though, right? So let's now put this. This has been an amazing stock, to be honest. But you'll see the RSI goes hot, and then you have a rollover. Goes hot, and then you have a rollover. Now, we didn't quite bang the boundaries here, but it hit near the top, has its rollover, okay? As you go back and draw this out, and you're like, wow, hits the top, and then what? Pulls back. That's not really a top. That's actually a divergence. We won't get into that. Now what? This is where they think you should buy this stock. It's on an 85 RSI. So I get an email this morning. It says I should buy this stock on an 85 RSI, which means historically, over the averages of 14-day movements, whenever it runs this high and you get this much green, you start to top out and then you start to pull over, right? So if this was on my interest, and I would go, okay, well, how much is that stock worth? ABBV. Now, their own system says it's worth $152. So the average analyst in America says it's trading at a 6% overvalued. Overvalued, okay? So based on the money flow, one, the asset's overvalued. That doesn't necessarily mean I don't want to buy it. If it's a growth stock, that could take care of that category. If it's AT&T or Pfizer, who's not really growing much, where did Pfizer get to on its last run? $61. What do they think Pfizer's worth? $61. So you see what happened, right? Pfizer hit true value and what? Stopped going up. So applying the same logic I just applied there, if I got an email about Pfizer and the RSI was on the green and the stock had had a pretty big run, right? And I know the money flow, and I'm like, all right, wait, this thing's hitting fair value. I mean, fair value is $60-something, and that's where we're at. Of course, all the news is good. That's why it's hitting true value. See, if you wait till everything's good, because sometimes I recommend a stock and they go, Gerald, you do know about the blah, 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 blah. And I'm like, yeah, that's why it's 30% below value, because they have fucking problems. If you wait till there's no problems and everything's fixed and it looks grand, you're the dummy buying the top. So as a trader or investor, we're taking on risk. That's the risk. Now to me, that's risk. Down here, not so risky. Meaning the lower it goes, the less risky the stock. Hold on, Gerald. Are you saying if stocks pull back, it's actually good? Yes. But that would require you to see the big picture. And most people think day to day means something. Woo, market was flying today. Feel great. Feel good. Got a bump in my step. Walking along, going to work, feeling good. Doesn't go that way. Oh, man. Man, now they're talking about an inverted yield curve. Jesus. Death cross, right? All that nonsense. Oh, fuck. It's so stupid. It's just such a waste of time. Stage 1, stage 2. We know it's a 3. It stopped right at the previous high. Now what? It's rolling over. It's now below the 20. It hasn't confirmed yet. The 5-day moving average has not crossed the 20. But if I was swinging, I'd be taking it down. If I'm an investor, what do? Nothing. I watch. What am I waiting for? Stage 3? Or stage 1, I mean? Or stage 3? As an investor, if it hits a stage 3, and if I come over here in my position size, look, what's my largest position? Back to 1. BX, 7% of my portfolio. And then SO, 6% of my portfolio. What you think is probably happening? Let's pull up the chart of SO. Oh, my. Look. What a beast. Feels good, Gerald. Look at it going up. So something that's 6% of my portfolio is ripping higher. Ripping. Now, what's the RSI? Am I a buyer here? Warren Buffett said, you're going to be greedy when other people are fearful, and what? Fearful when other people are greedy. This says greedy. Doesn't mean I have to sell it, but it's the alarm. If this was now pushing, say, the boundaries of what I would like as a position, well, it tells me inside E-Trade it's 6% of this account. What if I don't like that? What if I want everything to be 5%? Well, every time that thing hits the potential of a level 3, how do we know? Our stage 3 starts usually almost always the anchor point is the highest high on the RSI, and we draw a little point, and then price starts to go sideways. What am I going to do then? I need to go see what is the true value of the stock. It now makes up 6% of my portfolio. It could be starting a stage 3. We don't know for sure yet. What do they think the value of this company is that has grown into 6% of my holdings? They think the value is $69. It's overvalued. I know, you're busy at work, can't do what I just did here. It's impossible. So as I look, let's see. So it's overvalued by 6%. It's got a 78 RSI, and it makes up 6% of my account. What should I do? Now, one option is to do nothing. Saying, I'm cool with that. I like the stock. Matter of fact, I hope it pulls back so I can get some more. The only way to get it to 6% of your account when your account's big is like that. Okay? Now, I've grown that over years. Now, if you trade with me, when would I be wanting to be a buyer of such a thing? When I was buying, right? Now, we want to buy stage 1s, right? That's a stage 3, and you say, how do you know it's a stage 3? The RSI banged, we got our anchor point, and it held up for so many days, and that gave me a very clear picture of this. So what happens if I stick with Southern, and I buy those ones, I add a little breakouts, and then I leave it be? And then I don't even fucking look at it again until it's on a 1 or ready to break out. And then I don't look at it anymore. I know you're busy at work, but I don't look at it anymore, right? I can tell within 10 seconds, is it a stage 1 or stage 2, stage 3, stage 4? It should take seconds. You should be able to, just like that. You can just see it. You got it memorized. I know, but you're busy. So what is this? 3. Took seconds. I looked up RSI is extreme. This is the highest high of the day. What do I assume? This is the high point. And you say, what are you doing? Well, if this has become too large, this is where you trim. Are you not trimming into extreme RSI, right? You're selling into strength, right? You buy weakness, so you buy cheap, sell higher. That's it. It's all coming together here, right? And if we look, there's the pattern. There's the stage 1. There's the stage 2 breakout. Now we assume this is a 3. What if it keeps going tomorrow? Good. I assume that day's the top and that day's the 3. But since I trimmed it yesterday, I don't do anything. I'm not going to trim again. If I was trading it, I'm not getting out of it till it goes what? Stage 4 dive, right? There's that. Southern. What's Pfizer doing? Stage 4 dive. It hasn't confirmed yet. The 5 has not crossed the 20. Maybe this holds. If this holds and gets back up into this stage here, that 3 becomes a 1. Don't let what I just said confuse you. There is no difference between a 3 and a 1. These are zones of accumulation. Because something is a 3 doesn't mean it has to go down. And it can start to be a 3, can kind of dip, get back into the 3, which takes us over here. We are now a 1. And we expect it to go higher. What evidence could lead us to believe that this 3 is probably going to turn into a 1? What is the value of the company? So if we come over and we look, what is Pfizer? Is this foolproof? No, they say it's worth $61. Go cross-check that. Zacks, The Street, Yahoo Finance. Fuck, ask your Uncle Larry. Go over to knock on your neighbor's door. Do you know anything about Pfizer? They're going to look at you stupid because they don't invest. Most people have no jack shit about investing or investing in the stock market. And the things they do know are complete nonsense that actually aren't anything. Most 90% of what everyone talks about is complete nonsense. Right? How long have you heard housing prices are too high? I've heard it for 23 years. They were wrong. They're wrong. One time in 23 years, they pulled back. All right. All the ones I own, they kept paying rent. And then I bought more. It didn't fucking matter. It only matters to academics, people who talk, don't actually own shit. The guys that own it don't matter. And the only people that it would help, right? If you have 80, not even talking stocks now, I mean, or real estate. If you have 80,000 in the stock market and the stock market drops by half and you sidestepped it magically, moving and then got all back in your positions, big fucking deal. You think that is what saved you? No, it's consistently over a period of time not allowing shit like, well, I'm so busy at work, I can't keep doing this. That stuff doesn't happen. That's the killer, not a coming recession or crisis. The killer is, will you consistently stay on it all the fucking time? People don't. It's not that people aren't smart enough. There's plenty of brilliant, broke people. And there's plenty of complete dipshits that are rich. It's the actions they take day after day after day. And so I've accumulated over almost $1 million in real estate in this year. Well, a year and a half. And the whole time I've heard they're too high. Okay. Still buying. Now I'm looking for another one. Shit. I'm going to buy it all the way up. And then it comes down. Okay, I'll buy then too. So it's the same thing with stocks, man. So when it was 61, I'm like, damn. Why? We're done with this. Can't play it anymore. I can't add any more to Pfizer. If it's $61, that's true value. So that's off the list. So what am I focused on? Shit that's on the list. But you don't have time to look at a list. Because as you stay with this same portfolio, guess what starts happening? You know the companies. You don't need to research as much. What do you need to research McDonald's for? Has anything materially changed about McDonald's in your entire life? No, they're smarter than you. They're doing the research. They're doing the smart things. They don't need you to watch and make judgment over whether they did was brilliant or not brilliant. They're all smarter than us. The guy running it went to Wharton Business School. He's not a dipshit. He doesn't need me and you or Uncle Larry, anybody to give him advice. He's going to run the company and try to maximize profits and do the best he can. And the way we protect ourselves from him is by what? Diversification, portfolio management. So BX, I can never let it get to be 10%. That'd be too much. Now, look at trading though. My risk is 119. They say I have an aggressive dividend portfolio. I do. Okay, but I like it. Watch this one. Look at Uber. What is Uber? This is my speculative money. What percentage is Uber in my 18%? 18% of my high risk funds. And it's more than six figures, okay? 18% is in Uber. That's a lot. What am I doing? Taking on a big risk, right? What do they think Uber's worth? Why would I take on such a risk? One, I don't think it's that big a risk. What do they think it's worth? $60. $60. As it gets closer to true value, I don't want to have that much in it. Meaning I'm going to trade around the movement of the price, right? So when I own Pfizer and it became true value in my dividend portfolio, okay, I'm done. I may turn off the drip. I may say, look, don't even buy shares with the dividend. So my dividend's $200. Just give me the cash. Why? Because HBI is undervalued by 30-something%. So I want all these stocks that are overvalued right now or pushing up to the boundaries that I have decent positions in. Why don't you guys give me the dividend in cash so that I can apply it to the portfolio, right? So I can go through and say, I think we need to add some more down here to, whatever. And then what are the sizes here? Facebook, Roku, Twitter, PayPal, Nike, Dash. What you notice the sizing? Now I have a bet on. Can you guess what my bet on is? Rideshare. Now, you don't have to be a genius to do the math here. 18% and 10% is what? 27? So 27% of my speculative money is in rideshare. That's a risk. I'm taking on a risk, man. Right? Now, I didn't do this in one day. What am I doing? I'm showing you how I'm using the money flow. So if we look at Uber, right? If you look at Uber, and we're seeing the money flow pattern, man. Now, it's going down though, right? Sideways, up, sideways, right? Down, right? Sideways, up, right? Sideways, down, right? Sideways, up. Didn't last long. And then that one came down, right? That's when we had all the Russian shit and everything got wacky. Then what? Sideways. So where are we buying? So let's see. Let's see. Where did I mention Uber? Okay, here's the first place. 314. Continue to add to Uber. So let's find 314. Right there. That looks like the bottom. I get people all the time, Gerald, you can't buy the bottom. Okay, maybe you can't buy the bottom. I know you can't. You're busy at work. I can, though, because I make time. Let's see. Boom. Right? Do I want to buy it there, or do I want to buy it here? I want to buy it here, right? And then over here too, of course. So my point is, as I stay with this trade, because I think immensely undervalued, this representation, this is a big picture bet on rideshare. Now, what do I need to shake me out of this? If I'm you, what shakes me out? How quick you change your mind. If a YouTuber says something you don't like, you're like, oh, I guess I got to get out of that. Right? So this is an independent, researched, studied play on the future of American economics and what I believe will unveil. Right? And so I have a much larger weighted bet. Is it all my money? No. Now, actually, I own it in a couple other accounts too. No, it's not all my money. It would hurt. I don't think it's going to zero. So zero's off the table, right? Zero's off the table. It's not going to fucking zero. So if I'm right and it ever gets back to $60, what do I got to do to lose at this bet? Be too busy at work to play? I'm too busy. I can't play. My wife won't let me play. How do I get my wife on board? She doesn't want to be rich. She wants to spend money. It's usually the husbands, though. I get a lot of women ask me, hey, man, how to get my husband on board? I'm like, on board what? This money game. How do I get him on board? It's tough, man. I don't know. I think I'm kind of leaning toward you're born with it. No one may have exposed you to it, but you're born with it. Because my friends are fucking lunatic addicted. They're lunatics. I have friends that they're completely crazy. They're fucking obsessed with this. Like we can't open a beer and it's like he's already said 3 stocks to me. What do you think about blah, blah, blah? Or what about this deal? Like they're lunatics. The exact opposite of the people who, well, I'm too busy. Like you don't think they have kids and jobs and lives? Buffett has people around him. Carl Icahn. What about what's her name from Art Funds? Kathy Woods. Could you be her? Could you? That lady's got more conviction than most of the people I know. She sticks with it, dude. Shit's down 50%. She's like, nope, I'm right. I'm right, you're wrong. But Kathy, you're down 6. Don't give a shit, you're wrong. Man. I didn't see her cry. That should inspire you, man. It's a very inspiring story. Everybody wants to talk about Wall Street bets and fucking stupid things. Here's a woman like with actual attributes you can't find on a forum or buy in a book or in a course. Conviction, stay in the course. Holding your head up when everyone else around you is going against you. When things like, I just see Kathy. Oh, I can't do it anymore, Gerald. I got a lot of work to do. Like, come on, man. Like, you think that's what she's saying? No, man. We need to be inspired. I'm super inspired by it. I don't even have to like people to be inspired by them. I like people that overcome adversity and confliction and people, a lot of people talking shit about them. I mean, love Trump or hate Trump, man. You can take a lot of shit, right? I mean, that's an old man. These are old people, guys. There's a 65-year-old woman out there banging it every day, sticking with her strategy, talking. Look at the content they put out. She's on just constant grinding, putting out content, pushing her agenda, talking about what coming innovation. Just the grind of it, dude. It is amazing, man. Look at people like Michael Saylor, just every day, bam, bam, day after day. And you got other people with 20,000 in Bitcoin go, what do you think, man? And I go, I don't know. This dude has 3.7 billion. What do you think he thinks? He's a billionaire many times over in multiple businesses. And he's got 3.7 billion. That doesn't make you go, maybe they see something, right? So that was my point to my book, Enough Die Broke. It was to open people's eyes to some of the richest families in the world. All they do is buy dog stocks. That's it. But I'm too busy, Gerald. All they do is buy dog stocks. 10 fucking stocks, 1 day a year, you change up the allocation. Monkey simple. You could do it on M1 Finance in 30 seconds. And they got, I'm too busy, man. How would I ever do that? Like all the research has been done for you. This is how easy this is, man. So now imagine if we combine the dogs with this. So you put money in the dogs. And I do this now, man. I got money in the dogs of the Dow stocks. I'm in all of them, right? Let's see the list. Amgen. Cisco, right? I'm in that. Chevron. I'm in that. That's been amazing. Dow. I'm in that. I'm not in IBM. Coke. In that. 3M. In that. When was I buying 3M? Anywhere in here? No. Let's go look. Let's see. Trimming oil, COP, pushing gains into AG&C, MMM, and ETRN, rolling into higher yield. What day is that? 3/14. That was a busy day, dude. I made a lot of moves on 3/14. Hold on. 3/14. Where's 3M? What is going on the 14th? Oh my goodness. Gerald, did you buy the bottom again? Right there. Oh my. So if that turns and goes lower and puts in a new one, I'm going to buy that one too. What is this thing worth? Not that much, to be honest. 12% upside, still upside. 3M usually pays at a premium, so we got to factor that in. It rarely has a 4.5% dividend yield. Rarely is it that cheap. It's like Procter & Gamble, Johnson & Johnson. These are blues chip stocks that corporations, hedge funds, family offices, they just want that drip, okay? They're going to want that drip. It's only going to get so cheap. Now, we teach this in the money flow. I call it bread and butter. It falls below that 200. There's, I prefer 20% upside. The only reason I'm not concerned on it on 3M is it's such a high quality, like my influencer friend says, but they can't afford Bitcoin. This is one of those stocks. This is the Louis Vuitton, the Chanel. You get a bunch of fucking money in this, you're going to have a money drip the rest of your life. The richest families in the world own the Walmarts, the Targets, the O's, the Waste Managements, the McCormick's, the Sherman-Williams, the Home Depots. These are no-brainers. I don't have time to research. You don't need to. Other smart people have done it for you. The people that run the Dow Jones Industrial 30 average have done it for you. They don't let shitty stocks in the Dow, dude. If you only followed those 30 and applied the money flow and just kept doing it, and when prices go higher than they should be and the position gets too big and the RSI is on extreme, you trim it and you look to add to positions that are newer or that are below value, right? Easy concept. And so to do that, you got to see the big picture inside of learning that game, because here's the thing about this game, you never lose. You never blow out and you never lose all your money. It's never happened. So you're talking about a trading strategy that'll never go to zero. And if you wake up and the market is blown out, down 30, you have quality things. You just sit there and you wait. And as you learn that, guess what's going to happen over time? You see swing trades. You go, what do you mean, Gerald? Well, look at Gilead, friends. As Gilead confirms and builds out this stage 1, maybe that would be a good options trade. And if the market stays in a stage 2, which it is, where would be a likely target for this as a swing trade? Since I know all about it because I follow it every day because I own it as an investment. And you're saying you could trade around your investments with courage and confidence? Yes. And then you wouldn't need an article or anyone. Look, 20% upside, pays a 4.5% dividend yield. It is undervalued. It's hit all of my criteria buttons. What a great swing trade that would be. Where would you put your stop, Gerald? Easy. Right here. Right there. Right around in there. You buy 100 shares, you set your target. How are you going to get out of the trade? You're going to follow the money flow. If it moves down and hits, you stop out. That's trading. You say, well, I don't want to stop out. Then don't trade. Don't quasi-trade / invest. Don't do that. Be very fucking clear. And once you're clear, the clarity that you're going to bring to your day-to-day activities, and you're going to see the meaning, like you'll see other people's react. You're like, look at this guy. He thinks today means something. That always makes me laugh. Every day means nothing, guys. It's the accumulation of all those days that ultimately means something. But tomorrow, Monday, don't mean shit. Tuesday, nothing. Wednesday, nothing. Now, when we get to Thursday, we got a box, right? So last week means something. So as I'm looking at the charts on Sunday, I'm looking at the past. Now I can say, okay, this means something to me. Man, this is... Now, if we combine that... Now, Art Funds has some basic beliefs. You ever go read it on their thing, it's badass. So do I. Money flow moves in 4 stages of price movement. Stock market goes up as much as 71% of the time. Problem is not a straight line. The other problem is when it does go down, it goes fast. So if you want a short trade, that's cool. I'm not against that. People think, oh, he doesn't like short trade. No, I just think I make more money the other way. And you say, what do you mean? Because I'm going to win for certain. I'm not getting stopped out. I'm building up. I will win. The game that I play wins. May not win today, maybe not next month. It's going to win. It has to. Why? Well, I'm diversified. If positions are weighted differently. Do I take sizable bets that I hope could make me a lot of money? Yes. Look at Uber, much larger. I'm putting a bet on there. It can't take me out, can't destroy me, could hurt me. But if I'm right, it's going to make me a bunch more money than I would have made just being in an index fund. And that becomes part of my game, man. Same in crypto. So if you go look at crypto, Bitcoin's going to be 60%. Then Ethereum, like 25%. And then 1 to 3% spread out among like 30 other little coins. And you're like, what is that? Diversification. And it goes more like, I think it's more like 60, 24, and then it's like SOL's 5, and then 4, and then 3, and then it's just a whole lot of ones. Whole lot of ones. What are those? Speculative bets. The whole thing goes down together. The whole stock market goes down together. Penny stocks, buyout, they're all going down. But you can begin to weight your bet. What you don't do is make the biggest bet in the least, worst, you could, but I'm never blowing out. I'm not. Refuse. I have friends. I blew out, man. I got a buddy who's been a multimillionaire like 3 times. I just keep going up. Now he's gotten richer than me because if you want to keep just going up, you have to limit. He would go all fucking in on Uber. Not only would he go all in, is he'd borrow money to go all in, and then he'd put options on top of it and leaps on top of that. Then he would borrow to push more in. And he would have this massively leveraged bet. And if it hit, he would make a shit ton of money. That's how he did it. And so he would be just loading up on this, just piling in, leveraging it, leaps, piling in, man. That's how he would do it. He'd be like, why are you spreading your ability to win out? He would see this as, I'm spreading my ability to win out. Put all of that shit right here, dude. If you believe in it, go all in it. But at the core, I don't want to blow out. I want to take risk. And I'm all about risk, but it's managed risk. What does it say? Look at my risk grade. 164 on the risk grade for this portfolio. That's like the S&P is down here at moderate. That's where the S&P is. Conservative would be like all utility fund, okay? All bonds, that kind of shit. So, that's funny. That's funny. And I wouldn't say those are that risky. I mean, come on. This is, look, Uber, Lyft. These are my top 10. People always ask, what's your most conviction plays? Right here. Uber, Lyft, Discover. Now, Discover was huge. I've been downsizing it, and it's still in the top 3 because it's gone that high. So when I was buying Discover, it was a $50 stock, and it was undervalued by 60. Same setup as Uber, okay? So when I started buying this, it was the exact same setup as Uber right now. Way over here. We were in the $50 range. Right around in here. So, shit, it may have been even earlier than that. Maybe we were back in here. But it was around that $55 range. I forget the exact. I've been with it a long time. Had originally 150 shares. Now I just hold a core position of 50-something shares. It just sits in my account. I mean, it's just there. That's what I plan to do with Uber. Once it gets up to true value, well, what do they think the value of Discover is? 141. So during that time, I hit my target, got my money out. And since then, the business has improved. The targets have been raised. Right? So what? I could stay with it. So I've kept 50 shares. But honestly, I haven't seen a big enough pullback to get me interested. You say, well, you could have done this one. I could have, but I'd rather buy Gilead or Uber. Like I don't know. You could. I'm not as into this one as I am others. Create that for yourself. Get a big bet, man. And I don't mean stupid. Big enough that if you hit, it's payday. If you don't, that really sucks. Bitcoin is that for me. Is it possible that Bitcoin is fucking whatever? Sure. What if it's not, though? What if it's real? What if it does go to 500,000? So one of the things I've pushed people, and I know everyone can't do this, but everyone could have it as a goal. I want to own a full Bitcoin. And I've been saying that for a year. I don't know. And most of the time I'm saying it, people are like, do you think it's too late? Do you think the price is too high? No. I think whenever it comes down and goes into stage one, you just keep accumulating with the goal of getting one Bitcoin. I don't know if that takes you a month, a year, 2 years, 3 years, but one of your goals in life is to get one full Bitcoin just in fucking case. Right? You say, what do you mean? Well, let me give you another opinion. When I'm 36. I own 5 rental properties, right? And I'm doing this. I'm putting all this money flow shit together. I'm getting it. I'm learning from my trading. I've been in a million seminars, classes, done all that shit. And the money where I didn't do anything, the buy and hold stocks where I got frustrated and like cried and quit and I just fucking left it and didn't even look at it. I came back and it did good. And I'm like, are you kidding me? I did all this fucking trading to lose money, and if I'd have done nothing, I made money. And I realized, if that's true, why not embrace it? What are you getting mad about? Master that shit. What if you could do better than just make money? How could you do that? And then through that process, it began to form my trading. And I was like, oh, I was seeing it wrong, man. And then I began to see this big picture. The price moves through 4 stages, and that a down stage is not a bad thing, especially in high quality assets, right? And the good stuff, man, especially in that's just duh. Like when Pfizer hits true value, okay, if you own it, that's great, but you don't want to do much anymore until what? Till it comes down. And we know that this is a different class, but we know the 200 is a big deal. It stops, but more important, we know the money flow, right? We don't want to accumulate till it's undervalued and going into a stage 1, right? And we know what tells us that is the RSI. And I don't have to make a move because I see it. I may go like, hey, this is Southern Electric. It's the largest position in my thing. Maybe instead of buying some Southern or buying some Pfizer, I go to Bristol Myers, I go to Merck, I go to Edison, I go to Duke. Instead of buying Exxon, I buy Chevron this time. So I own Exxon, and Exxon comes down and it gets down here. But I don't have to add to Exxon. Instead, this time around, I buy some Conoco. And going forward, that's how I get AT&T. And then 3 years ago, when the telecoms got hit, I added Verizon. This year, I think I'm going to do T-Mobile. And as you go forward, oh, wait, you're busy at work. So busy at work. Can't get rich, Gerald. My mom won't let me. My wife won't let me. My husband won't let me. He says he'd rather us just stay like this. You're going to have to brainwash yourself. I'm completely fucking brainwashed. Anyone's been around me ever. This is why people don't hang around me, to be honest. A lot of people are like, that guy talks about is multiplying money and making money. I don't want to be around. It's conviction. I got to where I'd have friends go, oh, I don't want to tell you what I bought, man. Why not? You're going to say it's stupid. Why would I say that? Because it's depreciating asset. Yeah, it is. If you think those are smart, then buy them, man. I'm not mad at you. Just don't say anything when I'm doing what I'm doing. Leave me be, Let me go to the beach. You don't need to add any comments. Because I own it. You visited it a lot. I didn't. Now I own it. I was talking to my neighbor yesterday. I said, man, I'm trying to decide if I want to live here, if I want to live on the beach, live in New Orleans. I said, I think about buying another building in New Orleans, building a studio downstairs and let other influencers come in and we do stock trading, just like a building, like a business down there. And we rent out the other parts to other businesses. There's all these little businesses all over that just need space. They need a place to work on it, a shop. They need, or maybe even living space. And I was like, I could live there, man, and maybe at the beach. I'm looking at think about some house here, buying a beach house, And he's worked for 30 years consistently at one job for the state of Texas. And he says, as we're talking, man, I got to get into that investing thing. And he starts talking to me about letting USA Today do it. Okay. I gave him my book 5 years ago when I wrote it, left a copy on stage and say, hey, man, what do you think of this? Now, that is no judgment on him. That's not what I'm saying. What the point I'm trying to get across is I do this every day. I work, I have kids, family, mom, dad, all the bullshit in life, everything everybody else has, right? I just decided the order of the drip, man. And you can do this in all areas of life. You can be like, number one, health, period. I can't argue with that. If that's your number one, you should be pretty fucking healthy, right? You should be the guy working out, looking good. That's not me. I did that for a lot of years. I didn't get soft on that end until I hit 50. The money thing has always been first for me. Making money, investing money. Because I saw it as the only way to protect me and my family. It's the only way. And I had a kid yesterday ask me, how did you know your skills or hone your thing? I don't have any skills, dude. I just have shit I practice. I don't have any talents. I have shit that I practice. So to me, stage ones all look the same. Right? I know what that is. I can spot it anywhere on a chart, right? I don't know direction of price, but I do know that over time, quality assets go up. Houses go up. So I know I'm playing a rigged game. And if the game is rigged and 71% of the time it goes up, regardless of what anybody else says, irregardless, I don't care. It is going up 70% of the time. Any moves against that 30% of the time, I got to be smart. See, the part where it goes up, any monkey can make money. Anybody can make money when stocks are going up. It lifts all boats. You're not smart. You bought, it went up. The smart part, the part is the intangibles of, can I stay with this all the time? Or am I going to be too smart and make a big move? And I know countless friends, personal people that I know who made radical decisions to go all in or all out or all in this or pull all out of that as if they were oracles and regret it. All of them, every one of them, regret it. The only properties I regret, I sold. Wish I had all of them back. I don't know what I was thinking. Man. They're all higher now. Everything I've ever sold is higher. I wish I had that Netflix back at $50. When I sold because it dropped 50%. Went from 100 to 50. I fucking regret that, man. I regret it. I regret the lands that I flipped. I flipped a lot of land. I regret them. Wish I had the land back. I don't want the money. Give me the land. And as I begin to see that, and the older I get, the more and more I see that, I'm like, God damn, dude. It's what you keep. So busy at work, I can't focus. It's what you keep. It's what you keep. And you decide what you keep. Or you can let other people decide it for you. That's the trick to trading, man. The entries and the exits and how to identify, that's the easy part. The hard part is staying with it. Brainwashing yourself, being committed to the process. That's the hard part. And doing this shit day after day. Today's Sunday. I got a house I'm turning. I got to go check on it. Right? But in order to do that, I had to buy it. And then I had to buy it in the face of it's expensive. Right? I had to buy it in face of that. In spite of that, really, right? Same here, man. Same with stocks. So as we go forward, man, I'm telling you, if you stay with this, anybody spending money for 2-3 years and you've separated your trading from your buy and hold and you're doing 75% buy and hold, 25% trading, and you're doing that, you are way up. Anybody's been buying Bitcoin since I've been telling you need to just buy Bitcoin, should be up on Bitcoin. And if you're not, you've had plenty of chances to bring that price point down. Right? Even though that's not what we're doing. Guys says we're lowering our average. We are, but that's not the strategy. The strategy is that I'm adding on stage ones. It's not that I'm lowering my price point. I'm accumulating when prices are lower, and thereby it does lower my price point. I just hate when people phrase it like that. It's almost as if that is the goal. No, that's not the goal. Because here's why. And you say, why are you stressing that? Because the stage one this time may be higher than you paid last time, and that'll fuck with you. And I had a friend that this messed with him. He's like, Gerald, in 2009, we were paying this. Now we're paying this. And he couldn't buy another deal because they're always higher than the last deal. So my first deal was $24,000, right? My first deal was $7,500 down. The house was like $35,000, okay? I put $7,500 down. My last house that I did a down payment on was $100,000. And the last house that I paid cash for this go around was $312,000. And the previous house that I paid cash for was $89,000. And the previous house that I paid cash for was $24,000. 24, 89, 312. And at each step of the way, my friend, man, it's expensive, dude. What are you doing? It's expensive. I know. That's why we want to own it. One day Bitcoin will be $500,000. And there were dipshits telling you don't buy it because it's too expensive. And it'll be 10x from here. It'll be 10x. It'll probably be paying you yield. You'll probably be able to use it to borrow against. It'll be all this great stuff. And you didn't buy it because somebody told you you're too poor to participate in what the rich are doing. The rich are accumulating Bitcoin. Some of them may be buying this coin and that coin. That's not the discussion. But I know what banks are accumulating. I know what hedge funds are accumulating. They're accumulating Ethereum and Bitcoin. Now, they may branch out and say, let's allocate 5%, but I guarantee you when you go in there and look at their allocation, it's going to be like mine is with Uber. And they say, what about this stock? And I say, Uber. And they say, what about this stock? Uber. And what about this one? Uber. That's how I compare all of them, man. Why? I'm committed. I've researched it. If I thought there was one better, I'd be buying it. Now I do, obviously. Got to spread it out. It's not my point. My point is, in my own brain, whenever I'm looking at something, I run it, this decision against Uber. Should I buy this or Uber? That's how I'm seeing it, man. And if you remember in the COVID crash, it was this or Facebook. You're like, why are you buying Facebook? Everyone in the world's on Facebook, man. This, and they say, what about this stock? Facebook. Meaning that was a sure deal. It was a sure win. Exxon, when oil got, like Exxon's down at $30 to 30, $25. And Kramer's on tip, and I'm saying Exxon. What about Exxon? Exxon. Everything is judged against this. This is the greatest fucking deal right now. There is no better deal right now than this. And then you go, look, it's up. So what about now? I don't give a shit about Exxon. I hate it. It's not a good deal right now. I'm in it, capitalized, made money. I don't want to put any money in it. Everybody buying now, you're doing it wrong. Now, but let's say you just came into the game, right? Do you see the advantage? The guy's been in the game 7 years, 8 years, 10 years. In 10 fucking years, he never goes, well, I'm too busy at work. I have to take my focus off now. Right? What if you don't take your focus off? What if you committed? What if you're going to have different jobs and businesses and side hustles and that had nothing to do with your wealth building? It's a separate thing, man. It's a separate thing. And it's never going to be big. It's never going to grow. It's never going to if you don't commit to it, man. And respect it. And if there's an out for you, then get the fuck out now. Because it's just a matter of time before you tap out anyway. If there is no out, commit to that now. Right now. No, I'm never pulling this out. I'm growing this shit. I'm going to get rich. That's a decision. And you can say that or you could say something else. Your mouth, you get to decide. Now, in order to do what I just said there, means you got to commit yourself to protecting your trading. What does that mean? I need an emergency fund. I need to be debt free. When I talk about getting your personal shit together, your personal life, you got to build hedges and walls between you and the world, man. You know, the only people worried about a crash coming are people who have their buckets fucked up. Bring on a crash, whatever. So I don't put no effort into it. It ain't going to affect me, dude. It's not going to affect me. People are going to pay rent in a 2-bedroom house. McDonald's is going to pay their dividend. So is Verizon and AT&T. Everything that I own will keep functioning. The price may come down. All right, good. Good, because all that money that comes in, I'm buying more. You see, like, I'm free from that, dude. Free. Free from that. Man, it's free. I'm free from that. And I'm free from anybody telling me no. Nobody gets to tell me no. No. Right? No. I'm convinced. That's why when I bump into that guy and they're talking opposite of the money flow, fuck them. No, you don't get 1 inch, not one. People, you have to be open. No, I don't. I'm not open-minded at all. At all. I don't need to be. This works. I don't know if you do work. I don't know if you've been here long enough. I don't know that if you even have the fucking authority to speak to me. Like, what is their commitment level? How long they've been doing this, man? Get the hell out of here. Be careful who you let into your mind. I let very few people. A lot of people share shocks with me. Okay? I'm going to be honest. I don't put a lot of time into them because I don't trust you. Probably wasting my time. Right? Now, someone I trust, guy's been doing the game, always doing it, calls me out. Yeah. All right. What's up, man? Why? You got to guard yourself, man. Guard yourself. Shouldn't give a fuck what your family thinks at all about anything. They're all broke. You know? So definitely don't listen to mom about rental properties or your dad and they don't own any. That's the last person you should be listening to. So be careful where you get your advice, man. These guys, 3 top healthcare stocks may make your portfolio smarter. They say you should buy A, B, and V right now. That would be a horrific idea. What's the next one they say? Pfizer. We went through that one. Then they say Johnson & Johnson. Let's look. Yeah, we're past the buy zone here, okay? Past the buy zone here. But if we only buy stage 1s in Pfizer or Johnson & Johnson, that's what this is, right? Be here, where? Here. Here. That's just the 1s, not the 2s. Here, maybe in here. Doing pretty good, right? Doing pretty good. Doing pretty good. Is it hard to figure out that Johnson & Johnson's a good stock? No, man. Finding stocks is not the problem. It's applying yourself consistently and applying the money flow consistently over a period of time, giving it time to work, prioritizing it, and making a clear distinction of what you're doing in this account and what I'm doing in that account. Right? If you have a buy and hold account where you're completely selling out of positions, you seem very confused as to what buy and hold means. It means only put shit in there you're never going to sell, ever. Now, does that mean you may never, ever? No. But if that's the criteria, that's how you look at it, and that's how you judge it, I will never sell this, it changes who gets to get in the lineup, right? You could have a spec or 2 in there, but that's different than trading. And as we begin to spread it, like I would never have a position that's 18% and that's in my buy and hold. It's too big. I got to spread it out now. I got to take it down. I want to keep it and let it run. And that position may buy me 4, 5, 6 other dividend paying positions, right? I can use the growth for the growth and the dividends for the dividends, man. Anyway, so as I went through this email, 3 good stocks. They're all good stocks. I own all 3. Using the money flow, Pfizer was the best setup, the best upside, right? The best dividend and the best possible play of that email. So I had one company sorting and selecting, breaking down. These are our top 3 healthcare picks. Boom. Saves me a lot of time if I trust them, right? I then can go to the money flow and look at the technical side. That took seconds once you know how to do it, right? I can go and look at the dividend yield and see where it is. And I can look inside my own portfolio and say, do I need more healthcare or do I have too big a position? Or is there room? Can I add some more? Is it cool? Right? Maybe it's cool. So that sector gets on sale. Now we know about big pharma. We know about oil. So as you do the dogs of the Dow, you know about all these different sectors. You learn about steel companies. You learn about internet companies. And you learn about telecom. And this takes time. And you're not moving in and out. You're building wealth. And as you collect those dividends, you grow richer. And as you stay with this strategy and combine it with the money flow, you're going to get richer and richer. How rich, man? Time times amount times yield. You decide the amount. You got to figure that out. The process is there. The dividends are there. The stocks are there. It's up to you to enter and exit them. You might say, well, I'm too busy. Are you too busy? Too busy? A lot of broke people are too busy being poor to get rich. Because they're too busy. Too busy. Don't let that be you, man. Don't let other people, don't let this world steal your time, man. You decide what you think about, look at, eat, talk to, shake hands with, or listen to. You decide that. You decide that. You decide what you put your time and money on. You decide that. You know, I don't buy for a fucking second. You have a job that's so fucking demanding that you can't build wealth. Nobody would have that job. The president doesn't even have that job. That's not a real job, man. Nobody has a job that's so demanding you don't have 5 fucking minutes to look at a chart. Ridiculous. Nobody has that job, man. Nobody. Don't let that be you, man. Don't let that. You're going to get old. You're going to have 10 years go by and you get to decide what you did, what Bitcoin. 10 years from now, it'll be what you did today and yesterday and the day before and the day before. 10 years from now, where you're going to be. You could easily be a millionaire. I don't give a fuck if you work at McDonald's. You could easily be a millionaire in 10 years. If you begin to apply the principles, structure the buckets, get your shit right, start applying it, putting it in the right things. Because when you go through that process, you're going to meet new people. You're going to talk to new people. You're going to have new ideas. Your brain's going to be expanded. And you're going to ride through ups and downs. And you're going to build confidence and conviction. And all of a sudden, you now have not only the time, the effort, and the money to execute on big things that 8 years ago weren't even in your fucking vocabulary, or even 3 years ago. Never even occurred to you could do such a thing. And then boom, now you got the money and you take half out of your trading account and you execute on that first deal or that first duplex. Now you have all these different, and just 3 years ago you had none of this. Guys, this is why I can't do that. I gotta do a lot of work. Okay. I talk to a lot of broke doctors. Broke. Fucking doctors. They're broke. You know why? They're busy at their job. They don't have any time to think about investments. Nobody gets that fucking out. You have to think about them. You don't get that out. You don't get an out when you don't have to buy Bitcoin. You're poor. Bullshit. You better buy Bitcoin or you will always stay poor. And it's not the Bitcoin itself, it's the process, the idea, the thought process. Of course I'm going to buy some of that. Of course I'm going to execute on it. Of course I'm going to own dividends. Of course I'm going to buy real estate. Of course I'm going to do these things and that. Of course I'm going to do these. I'm not going to do them because I don't make much. Those days are over, man. It's open to anybody, man. You guys be good, man.